Hello everyone, and welcome back to Explain the Charts. Today, May 12th, 2025, we're diving deep into USDCAD, analyzing both the latest news and the chart data to give you a comprehensive view of what's happening. First, let's take a look at the recent news and events impacting USDCAD. News sources indicate a potential for a bullish breakout driven by trade optimism. A key event is the interim trade deal between the US and the UK, influencing market sentiment. Tariff reductions and overall positive trade developments are also playing a significant role. Now, let's shift our focus to the chart and see how these events are reflected in the price action. We will start with the daily chart to get a broad overview. Looking at the one-day chart, we can see the overall trend and key levels of support and resistance. The trend since late 2024, when zooming out, has been quite volatile. There have been drops as significant as 10% in a single day, and the current day looks to be forming a bearish candle. However, overall sentiment remains neutral as the chart isn't quite trending any direction. As Forex.com mentions, there is a high amount of dependence on what the 2025 Fed rate cut expectations are. Now, let's zoom in on a specific timeframe to examine recent price action more closely. We'll focus on the period from February 2025 to today, May 12, 2025, to identify any emerging patterns. This range captures recent volatility and the lead-up to the current market conditions. We can see the market has failed to break 1.47, while recently there have been lows near 1.37. Switching to the one-hour chart, we can drill down further and identify potential short-term trading opportunities. Let's analyze the hourly candles from the past few days to gauge intraday momentum and potential reversal points. On the one-hour chart, there's been some consolidation, with a flat top around 1.393, and it has generally been range-bound. Finally, let's move to the 15-minute chart to analyze recent price action. This shorter time frame is ideal for identifying immediate entry and exit points based on short-term momentum. It has also been quite range-bound, and we could also consider some descending triangle structures and potential breakouts to below. To recap, the key price levels to watch include potential resistance around 1.47 and possible support near 1.37. Based on current trends, a break above 1.395 could signal a bullish continuation, driven by the optimism surrounding a possible trade deal with the UK. However, failure to maintain momentum above 1.39 could lead to a retracement towards 1.375. Keep an eye on US CPI data, as a softer-than-expected number could weaken the US dollar, potentially reversing the recent gains. Ultimately, trading USDCAD in the coming days requires monitoring both the chart patterns and these important news developments. Trade wisely.